We've got a lot to dive into in this episode. There are some questionable moves from Jack Moll, who appears to be using Bitcoin and other forms of money. He claims he might use them to settle some obligations, which, on the surface, sounds reasonable. If you've been following along, you know we've talked about the M2 money supply and Bitcoin has been tracking it closely. We'll also discuss Charles Hoskinson's statement about Ethereum potentially being dead within the next 10 years. Then, we'll shift focus to XRP and the potential explosive move I'm expecting in May. Last night, I shared my target range for XRP in May at $4 to $5. We'll go over the charts at the end of the video and identify key support levels, as well as the next two resistance levels we're watching. All of this momentum is expected to start with Bitcoin, which is making its push toward the $100,000 mark. As of now, it's trading around $92,257. Ethereum is down 3.41%, after a 1.47% drop yesterday, currently priced at $1,742. XRP has declined further, now at $2.14, down nearly 6%, but that's okay as long as it doesn't fall below $2.10 by Sunday. We already talked about this in the first video. The total crypto market cap is hovering around its 2020 all-time high at $2 trillion. Cointelegraph reported that VanEck has filed for a spot ETF with the SEC. XRP seems to be leading the ETF charge, with 19 ETF applications currently filed. These approvals might come once the Ripple vs. SEC lawsuit concludes. That would be a major milestone and could bring significant capital into the market. ETF launches might happen in the second half of this year or maybe even in 2026. Either way, they're coming. When they do, we'll see big players like WisdomTree, Fidelity, and maybe even Charles Schwab enter the market. Don't be surprised if Schwab opens a crypto desk and jumps in. If you're looking for crypto-themed merchandise, visit my store at thecryptoshop.net. Shipping is free worldwide on orders over $35, whether you're in the US, Italy, Japan, or anywhere else. We still have some tumblers, mugs, sweatshirts, t-shirts, and tank tops left. Back to Jack Moll. Some of his statements seem a little off. He says he wants to increase his customers' Bitcoin per share. For example, if someone currently has 0.05 BTC per share, he aims to grow that to 0.06 or 0.07. It sounds great on paper, but it raises red flags. He compares this to how ETFs work, but says his company, 21, is different because it's an operational business generating cash flow and building on its Bitcoin balance sheet. In theory, this could be a new model for creating shareholder wealth in Bitcoin terms. But he also says strange things like, we're not here to beat the market, we're here to make a new one. If I held 0.05 BTC, I'd be cautious. Something about this whole 21 capital setup doesn't sit right. Finally, regarding the M2 money supply, Bitcoin's behavior has closely followed M2 trends. While it's been slightly delayed, the patterns are striking. The green line in our chart shows M2, and Bitcoin seems to mirror it. I think we'll need about 4 more weeks before we see significant changes, but this trend could drive even more anxiety and excitement as Bitcoin continues climbing. Bitcoin might still hit $130,000 or even $150,000. But let me be clearer, the true bull run hasn't kicked in yet. What we're seeing right now is more of a soft bull run, slowly unfolding rather than exploding. Alt season seems to be brewing. Crypto analysts point out that the altcoin market cap is once again bouncing off the $835 billion support level, just like it did in Q1 and Q4 of 2024. Those two times led to solid altcoin rallies, and if history repeats, we're building momentum for another surge. The current macro environment supports this outlook, especially as we head into the second half of Q2 2025. With only 2 months left in this quarter and Fed policy potentially shifting toward rate cuts, especially if Trump regains office, we could see strong tailwinds for crypto. Rate cuts generally fuel risk on assets like crypto, and with multiple alternative ETFs filed, investor interest may continue to rise. That's why I'm holding through May and June. Something big might be on the horizon. The big question is, will this be the market's top, or just the first wave before a true peak later in Q3? One indicator I'll be watching is Bitcoin dominance. If it hits 70% and sharply drops back to below 50%, it could signal that the cycle is peaking and money is rotating into altcoins. Meanwhile, Trump jokingly suggested writing $35 trillion crypto on a piece of paper to cancel the national debt, implying support for digital currencies. He also said many people still don't understand crypto, but he believes it is a bright future regardless of election outcomes. Charles Hoskinson added to the conversation, warning that Ethereum might not last another 10 to 15 years. Many current cryptos, he says, lack real use cases and were only sustained by early fundraising hype. A lot of today's top 10 won't be there a decade from now. Just look at the list from 2017. In his view, XRP stands out as one of the few major assets with staying power. If it can break above $2.58, especially with Bitcoin pushing past $100,000, it could rapidly spike toward $4 or even $5. That's the key level to watch. But again, everything hinges on Bitcoin leading the way.